Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Thursday, December the 30th. The year's 2021. Let's talk trading. Keeping it simple. Keeping score. These videos are for educational purposes only. Your results may differ from mine. Okay, keeping score, right? Keeping it simple. Are you making money or not? That's usually how people keep score when it comes to trading. Unfortunately, that's not the only score that you need to keep. And it might not be the most important one in the short term. Now that might sound contrary, but the reality is you need to keep score on whether or not you're following your trading plan, how well you're adhering to it. So you could either be really harsh and say if you didn't follow every piece, you get a fail, and if you followed every piece, you get an A plus or a check mark. But usually it's a little there's a little more to it than just that simple. Not that it's shades of gray, but you might say, did you execute your risk management each and every trade? You might do that each and every trade, so you get a check for that, but maybe you get that minus point because you rushed into the trade, or you airballed a trade, or you exited because you saw the money as opposed to you really wanted to wait for a trading signal. So when you're looking at keeping score, it's not just the money, because over the long haul, if you're not checking off all those other boxes, then you might not make money in the long haul, over the long term, or you might not make as much money as you could have had you stuck with your plan. So and that's a little bit different than the Rogo regret of getting out, because if your plan said to take 5 pips and you took 5 pips and then it went on and you maybe could have taken 10 or 20, if you followed your plan, that's okay. Now, maybe if that happens on a regular recurring basis, that you take 5 and there was another 5 or 10 to be had, then maybe you need to alter your plan as opposed to just doing it on the fly. Because like I said yesterday's video, you have to decide once and not keep deciding over and over and over again. So keeping score, keep it simple. Maybe you have, I don't know, say no more than 5 things you really keep track of. So for example, your risk management, probably the most important. In your trading plan, your entry is on time, your exit is on time, your position size is correct, which you could say position size is part of risk management. Um, you didn't just airball a trade or seat of the pants, and you didn't say add any shiny new objects onto your screen. So those are the types of things you might look at. The shiny new objects, that's not really something that I think most traders are prone to do. That each and every trade they're adding a new indicator or something. Maybe each and every day they are. And that's just one more thing to keep score of. That you're pretty much staying in your lane that you've defined as your trading lane, and you do it. So for example, since I've been trading with Walmart, we only trade the pound dollar. I haven't strayed. I think I've maybe traded maybe a handful of trades over the past year that weren't the pound dollar when something was just screaming at me to do it. But other than that, pretty much wake up, turn on the trading platform. I'm just looking at the pound dollar, nothing else. And I think we've kind of proved over the long haul that you can just trade one pair and be profitable. So that's just something you might want to take a look at. Okay, let's run through the charts quickly here. Okay, the on the monthly, the pound is still up. It's 194 pips over the open, 32 off the close, and 329 above the monthly low. On the weekly, 32 off the high, 104 above the low, and 99 above the open. And we still have a couple of gaps that haven't filled on the week. And we look here, we are above the opening range for the week. As you can see, today price has broken out of the upper wick zone, both to the upside and to the downside. So anybody doing the wick zone trades, there was profit to be had. Remember, wick zone trades are breaking out of the wick zone. 152 pips below the yearly open. So it looks like the pound's going to close within maybe somewhere between 1 and 2 cents or so of the open here. So we're at one. The open was at 136.41. We're at 134.91. So we're only off by a penny or two, penny and a half at the moment. So really, all that during the year. You look at the year here, bringing up the monthly candles. It's just up, down, and back. Almost looks like a sine wave there. So that's what's happened around that yearly open. We actually broke out of the weekly inside bar. The breakout was at 35.13. We hit 35.21. So there was a possible 8 pips to be had taking that breakout. Somebody asked on Facebook when to take profit, and my response is take profit when you can. I mean, you don't know what the market's going to do. The next tick could be 10 pips against you. You just don't know. So if you see the market struggling to get above or hold above a certain level, just get out. So, I mean, if we take a look here, we can go all the way down to the 1 minute candle. And so you can see here, it broke out a little bit, came back in. So maybe it's like, wait a minute, I've got some red candles there. Maybe I better get out because I was going long. And then here, the same thing. You got in, and all of a sudden you start to see those red candles. And right here, it was breaking below that previous high there. And just get out. Take your money and get out of the trade. There's just no, because you don't know what's going to happen next. And the worst thing you want to do is start to chase price, wind up buying here and looking what happened. So you stick to your plan. Maybe you go long here. It goes up. Let's see, how high did that go? Let's see, we put the cursor on it. Say call it 16. So maybe you were up 3 pips. It comes back down. Maybe you get a pip and a half on the trade. And for some of you, that might just be a break-even trade because of spread. So if price stops doing what you want it to do, get out. I mean, then you had another chance here where, price went up, then it came back down. Let's say you got in right here and price came down to there and you exited. Then you saw it go all the way back up. Well, that's just what happens because then look what happened next. It came back down. So, if you have something simple, it's maybe trading with the candle color. So, maybe you trade with the M5 candle color. Maybe you trade with the H1 candle color. And you just trade accordingly. Or maybe you just trade with the daily candle color. But, you have your plan and you follow it. And, to answer that question, you got to take profit when you can. And you And you can't have that row go, because that row go will mess with your head and really mess you up. Another day of below 100 range. Once again, we're in holiday week here. Past last week, this week, holiday weeks. So it looks like not too much is happening on a daily basis. Nice moves here above and below the daily open and the buy zones. So you can see here there was an opportunity. There was an opportunity. There was an opportunity. You had a short opportunity. There's opportunities there, and if you just stick, or maybe you just want to trade the daily open line, plenty of opportunities there to get that daily cross, or daily open cross, I should say. Red rats had a couple of chances to feast here. Green rats actually looks like they might have had a chance to feast here. It looks like that might have been, yeah, it's like 50 some pips. So there was a chance for the green rats to feast here. On the pivot trading plan, let's see, R1 bias short, that one would have paid off. S1 bias, we haven't been near it. At or near the pivot, they said the bias is long. We came down to the pivot, took the long bias, R1 short. So pivot trading plan paid off. We took out the pivot on the daily. We're missing the pivot on the weekly. And we've taken out the pivot on the monthly. So going back to the weekly pivot, we had 2 missed pivots in 2020, and looks like we're going to have 2 missed pivots in 2021. And then we'll just have to see if sometime next year some of these pivots get taken out. I mentioned earlier about the wick zone, in and out on the upside, in and out on the downside, then back and forth here. Price doesn't like staying in the wick zone. That reminds me, I need to put those statistics up. I should probably make a note to do that. On the higher low, lower high, here on M1, the trade just triggered a few minutes ago, and you can see price is now moving back the other way. But you see 3-ball to 3-ball, put in a 3-ball, you see it actually hit the 50 percentile for you fib traders. Actually almost hit the 78 right here, or I can't remember. I haven't done fibs in so long. I can't remember what all those different percentiles are off the top of my head. 76 percentile. On the wall mall sweet spots, you can see there was some nice price action a few hours ago. A couple hours ago, there was a short to be had last hour. Short would have burned your fingers, but the long would have paid off, and we've got a long happening right now. And you can see here on the tick history, the movements when the buyers take and then the sellers take back over, and the buyers take back over. Not really anything to write home about. But you can see here in these movements, you got 4.3 pips. It started going against you. Be happy with your pips. We hit the upper ATR range and then came back out. And somebody was asking how to trade this. It's real simple. First line it encounters, if it's red, you go short. And if it's green, you go long. Of course, you trade with the candle colors. So, fellow traders, keeping score. Let me know how you keep score if you do something a little bit different. I'd like to hear it. But when you sit down at your trading platform, always remember and never forget it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.